Good morning. Welcome to the breakfast show. This is Martin here, and with another episode at episode 146. Definitely last night we have seen the Dow Jones really cranking up after selling off for the last 3 days as the Omicron threat remained to be seen as whether it will have a great impact on the local economy that we're seeing in Europe and also in US. But definitely from the Prime Minister of UK, which is Boris Johnson, said that no lockdown will be there, and also Biden, which supported Dr. Fauci, no lockdown in US, and also some of the booster vaccine, which seems to be working very well against the Omicron virus. Then we can see this rally is going up. Now, like it or not, what we have seen so far from the US market has provided a basis that maybe the Omicron has a bit overblown, but definitely in spite of what the economists are saying, there is a little bit of slowdown going on because the number of unvaccinated remain to be big, and more importantly, they are also looking at the hospitalization that we've seen also in the US and also Europe. Now take note, the UK is about 1 week or 2 weeks ahead of US. So what's happening on the Omicron scene of the COVID-19 is likely to be focused on UK and England in here before those same symptoms will go to US. And again, how it's going to impact us is going to be very much similar. I think many of the audience who are listening today will also agree that what's going to be happening in US will likely to come over to Malaysia. Now also in Malaysia, we have about 11 or 18 cases of Omicron, and that would be the dominant COVID-19 variant for 2022, which is only a couple of days ahead. Like it or not, the COVID-19 will still be with us for year 2022. That's for sure. 2023, I think likelihood, maybe 2024, we start to ease off in it, all as more and more of the pharmaceutical like Pfizer and Moderna continue to churn out a lot of this booster shot, as well as the COVID-19 pills that will help to reduce hospitalization. That is a quick wrap up of what I understand is likely to happen in our market. Now let's go on to our local market too, and what we have for you in our breakfast show. And thank you for sharing this video in your timeline. We really appreciate your time, and I do know this is a festive season in here. Christmas is just a couple of days ago, and to our Christian friends who are celebrating, Merry Christmas to you, just in case I forgot to do that. And also for those of you who are traveling and for holiday, I did my holiday last week, and for those of you who are likely to go for holiday, just be safe and drive carefully. The case is we're still not able to travel outside of Malaysia as I said before, so we have to do more of the local tour. All right, let's look at what we have for you this morning in our news headline. And definitely today is Wednesday. We'll be focusing on the ST2, which is the stage 2 share. Now do take note, one of the new features we have for you in the stage 2 shares as well as Pentagon is the weekly R and the weekly S. Weekly R is resistance, weekly S is a support. You could use this as a likelihood of a possible entry, and usually when the market breach to the weekly R, it is a test for the entry because you're buying on the breakout example trade in here. And also, if the market were to break through the weekly support, that means the market is turning down. So take note of this, the weekly R and the weekly S, which I'll be showing you guys too shortly. Now also in our news headline this morning, first thing first is the World Bank, which came out and publishes GDP growth for 2022. Now taking into account what I've just talked about earlier of the Omicron virus, Malaysia is expected to accelerate growth by 5.8% in 2022 compared to what we have 3.3% this year. All right. So a lot of people are saying that how is this 5.8% is going to be impacting our local stock market? Is it going to go higher? Is it going to go lower? Is this going to stay the same? That is the usual question that I usually get from many of our audience. And of course, for some of you, would this acceleration of the economy really pans out to what it is? Now, like it or not, usually this kind of news are already been priced in here. It's the surprise that if we do get in the economic growth, or some cases where we have foreign funds coming in. But I do know that with the geopolitical situation right now, the opposition, right, seems to be losing the upper hand, which previously they have, and it does look like the coalition parties are getting stronger, which does felt very well for the stock market in here. But yet to be seen is the foreign funds flows. Now, if we take the foreign funds flows this morning in here and just go over tradebsa.com, if you can see that, and you just need to just scroll up where you like to see the foreign funds flows in here, just on top of me here, just waiting for red. We are seeing a host of negative, and you can see here red means their outflow, 60 million, 10 million, 60 million, another 50 million, another 100, and you just need to mouse over it and you can see that's 153 million. Even as of 21st, we are seeing that's yesterday 120 million. So all the outflow are going back, so it becomes very, very difficult for this market to continue to go. But then again, if the foreign fund were to come in, right, were to come in very quickly, the market will surge up, and guess what, many of our retailer will take profit. And that's what usually the case is, because when the market is going through a sideways accumulation, any surge in what we call a breakout, usually it is distribution in here, perhaps with the exception of the finance sector, which I will talk about it tonight in our live FB show. So make sure you catch me tonight in our live FB. If you do notice, tonight on my 9:30 talk will focus on KLSE and US market, what happened and sector to watch out for in 22. So make sure you catch me in that one, as I will talk more about what's happening in the what has happened in year 2022 as we round up this year, just a couple of days more, and what are the sectors going forward in here. I will also give you my prognosis on the US market in here, because a lot has been focused whether US market will still surge as much we have seen this year so far in here. What is your take? Let me know and pencil in there in here. All right, and let's move on to our next story. Right now, next story is on the REITs, which is a good dividend paying for many of you who want to have a stable 5%, 6% in here. So this article talk about office REITs, but in my opinion, I'm more in favor of the industrial REITs, which is the commercial one, but not so much the office, because from the work from home concept, there's not much have been taken in here. But having said that, you could see the office research house like Central REITs for target price of 95% in here, giving it a 8% dividend yield. But take note, sometimes this kind of dividend yield are taken out from the stock price itself, so take note of it. It does give an 8% dividend yield, but you are losing the initial capital outlay that you have in here. So take note. The only REITs that I like is Exim REIT, which seems to be holding up its level despite paying it, with the Hong Leong Research favoring Exit REIT at a target profit of 232 in here. Now IGB REITs has been given target price of 171. So let's take a look at some of these REITs that we talked about here just now. First one will be the Exit REITs. AX, yep, there you go. Just click on that one. Exit REIT, and looking the stock chart, stock comment here, and you could see Exit REIT is holding up at least at the 104, but it does have a target price of 238. Next one we are looking at will be the Central REITs. Okay, Central. And Central REITs is holding up its level 2 here at the what is the price here? Price is about 90 cents, and the target price that we have for this REITs, okay, this REITs is what we have here, 95 cents. So we're almost there. Right, so there's a little bit of not much of an upside in here, but definitely Exit REITs at 232. Let's take a look at Exit REITs. Initially just now was about 1 something, right? Exit REITs, we were here, and let's take a look at this one. Exit REIT at 235. It almost at 184, that level in here. So you still got a bit of upside in here. And remember, it is something that you want to have in your portfolio to kind of stabilize it, at least you get some sort of dividend. My take is exits REIT being one of the best. All right, it's not a great year for being REITs, but definitely it does provide the kind of dividend that many of you are yielding for. Okay, let's move on to our next story. Now the next story is on Gamuda, which is the property developer and construction in here. So this piece of news talks about Gamuda first quarter net profit soared to 152 million here, and for the first quarter ending 31st October 2021 from previously 110 million, but revenue fell 2.2% to 747 million. But what's more interesting is the long period of congestion in terms of the setup. So let me show you here. GAM. Okay. It's easier to type. Okay, I'm typing it out. So you can see Gamuda here is looking at stock chart, stock comment, and you will notice from here onwards, Gamuda, right, is going through what we call a double bottom, right? So that means just merely wait for the green pentagon in here. And let's take a look at the stock price today. Did Gamuda likely to go up higher? No, it's down -1%. Now it's going to be kind of difficult to really make money in the long term for a lot of this construction company in here. One of the ways to really know is to use the seasonality monthly return on our VSA 360, and those of you are members who have it, you can see the overall price gain and also overall monthly seasonal gain. That will give you some sort of indication if this is a long-term buy that you have or just purely a trade that you wanted to do. All right, take note of this one. Next story that we have is the analysts are preferring the basic material, or we call it the industrial product in here. So a couple of buy calls that was made by the analysts: Press Metal, Chaya Mata Sarawak, and M Cement. So let's take a look at it, each and one of them. I'm switching to a wider chart here. So first thing we will look at is Press Metal. Now Press Metal did hit a $6 initially, but since then he have came back down, and you can look from the chart wise here. Right, you can see here it hit the $6 right at the top here, but since then has moved down to 540, forming up at a very nice base. But I do think that that is also in line with the Omicron coming in, and as such the market has been impacted in here. The news of the interest rate will have an impact also on Press Metal. Let's take a look on the this morning. Stock prices should be up this morning. Now it's almost remained unchanged at 520, but it's holding up at a very nice pace. I don't think you should exit Press Metal for a longer one, but it's definitely a good play on the reopening of the economy. If it does reopening after the Omicron, you'll see much more of this. And looking at M Cement too, next one. So M Cement stock chart, stock comment here. You can see this is where the market broke down to what price was this? 3 ringgit right back to 240 in here. At one point of time, I think that this chart has to move back higher. Right now it's a low base. You want to dip back to form a double bottom before you want to go back in. And this is a good of what we call a bottom fishing trade. If you want to do this as a bottom fishing trade for the construction, okay, construction and basic material in here trade. All right, let's move on to our next story that we have for you. Now, next story is Yinsun has plenty to gain from a latest contract win, and CIMB reiterated a buy call on the stock as they felt that the earnings per share will double in year 2021-24, which is fair bit of year in here. But Yinsun has a nice setup, as I said before, long period of congestion, and then finally making a green pentagon. You can see here, this is one of the better charts that I've seen before in here. Green pentagon, a lot of low volume here, very classical, but will it make a run, as this is a play on the oil? So if oil were to go up, then this one is likely to move higher. That's my take to it. If oil is not going to move up, and this is likely to fall stagnant right at the 6 ringgit level in here. So take note, a lot of the time, many of these stocks move in function of the overall sector. That's why it's important for you to understand the sector. And this is something that we'll be talking on the 11th and 12th of January, which is about 2 more weeks in here. I do hope that want to invite you to join us in our US ETF sector, building wealth and also building income, where we see many of those opportunities, which I will talk about it shortly in here. Now also, one of the news from the COH talks about the weathering of the tough times because of the reduction in the ASP, or average selling prices in here. Used to be around, pricing difference used to be around $40 over, but it has gone down to $21 over in here. So this article talks about, yeah, it's about 25 right now. All right, from previously 35 US dollars. But there are a couple of sell call. The Hong Leong Research is giving it a neutral call to the overall glove sectors in here. But there are some, I heard that influencer bloggers asking people to sell. And to my opinion, this is a pretty good move. When the public doesn't want it, this is where this stock is likely to go up. Having said that, this is the unloved, the child that nobody wanted. You know, when the COVID came, everybody wanted it. And also I talked about previously when there was a Omicron first hit, that was a time for you to exit some of the rubber glove stocks in here. But it was a very quick sale. That's why you need to be fast. For most average investor, if you are pretty slow on it, then tendency you will be holding to your rubber glove. In my take, if year 2022 will be a very muted year for rubber glove in that. Having said that, there will be a little bit of gain, but that not much, because rubber glove, if you look back at Top Glove, right, Top Glove has fell below the pre-COVID. Think of it, right? Now this is due to the overall supply from the China market as well as the Thailand market, which flood a lot of the rubber glove due to the high demand that they've seen previously in here. So if you look at this right now, let's take a look at Top Glove, and you will see Top Glove stocks have fallen a fair bit. All right, Top Glove, and you can see Top Glove has fallen even lower and lower, and it has a target price of 156 ringgit, and right now is doing around 180, which is, you know, once it hit the 156, so what do we do next? All right, and of course, we all know Top Glove missed the earnings, right, which is felt more than 90 over, which is expected, because once it hit peak earnings, the stock price will drop. And that's what the going forward, the rubber glove remain to be a trading stocks, okay, a reading trading stock. A hold for Hatta Lega at 610. Let's take a look at Hatta Lega. Okay, Hatta Lega 610 here, and so right now is doing very similar, as I said before, 560. So a little bit of upside. If you're able to get out at $6, hopefully we see a bit of rally today. I don't think so, because with the Omicron, which I've talked about in here, coming in, giving it economic, you will see many of these stocks continue to fall, or in this case right now it's holding up at 529. All right, let's move on to our next news. All right, now our next news is on the US market, which I'll talk about later. Now we are trying to see whether we are experiencing a Santa Claus Santa Claus rally. Okay, so if you look back from the chart, we have seen now we have three really bad down days in here. Okay, now this is not updated, should be updated in about the noon time. We have 3 down days, broke through the ATR stop loss with the red pentagon, but last night we have a nice rally on the the US stock in there, and we are looking whether it was possible that the Dow Jones could retest back the old high. Now, yet to be seen. We have a few more days, and also Friday is a public holiday because of the Christmas period in here. So we'll probably have another 4 more days, and volume is going to be thin. So any rally up may be very artificial. Now keep track in time, but then again, when they're coming back on the next Tuesday or Monday, right, we might see a little bit of volume coming in. So for the US market, it's yet to be seen here, but right now you could see on the S&P S&P 500, we do have a triple top. Right now, triple top usually is a sign of resistance. It will take a lot more for this market to break. And in my opinion, I will find it that it's going to be very, very tough to break through this old high in here, because you have the BBB, which already failed, which is the Build Back Better infrastructure bill, which has been turned down by Joe Manchin, and right now President Biden is going back to his own planning desk and see what can they do for year 2022. And don't forget that 2022 the midterm election is coming also, and that will also have an impact as his popularity continue to drop in here. So what will be the so-called driving force to lift this US market? We did see the inflation rates continue to go up, and 3 interest rate hike has already been projected in either in 2022 or 2023. So this will play into the stock market. What catalyst can we potentially see? Definitely the only one we can see will be the earnings, okay, would be the earnings and the tapering of the bonds at at 30 billion every month. That would see this market slow down. So as the market goes higher a bit, all right, we will see likelihood of profit taking, because we don't see the catalyst that we wanted to see. But that doesn't mean that this stock is going to go through a sell-off or what we call a downtrend, right? It's more going to be a trading up, 2 step up, 1 step down, 3 step up, 2 step down, that kind of thing in here. But the economy is still growing. So, but I will talk more about this tonight. So make sure you join me, okay, at 9:30 tonight for the KLSE and the US market, what has happened in 2021. All right, now let's take a look at the next stock in talk about. It's definitely Apple. Now Apple has been getting great review with the target price by the analysts at about 180 or 200 US dollar in here. For those of you who held on, this is a good long-term play, which I've always been talking fairly favorable in Apple in here. So let's take a look at the Apple stocks, and you can see it did have the red pentagon in here. But yesterday it went back up to another $172 in here. It does punctuate. The question is, will it break through that $180 to hit straight up, all right, after Christmas? And the results will be coming up very soon. But we do know that for Apple, it's rebounding yesterday, and they will continue their share buyback, almost 3 to 4% each year. So that's why you are seeing Apple continue to lift higher, because of the share buyback that they have been doing, and yet coming out with great products like the iPhone 13. Now let's turn our attention right now to the Singapore stocks in here. Definitely one of them is Pentagon Guider that I want to share with you in here. SGX, go SMARTRobie, and going to Pentagon is item number 12 that you see here. Item number 12 is Jardine Madison J36, which did turn green Pentagon on the 21st of December. Weekly R of $56, so $56 will be definitely a good entry. Okay, J36, and you go on the stock chart stock. So you can see in here, right now we have a green Pentagon, so 56.16 will be a good entry. Let's take a look at today whether it did hit this price. It's only 55, so you need to wait for 56 because it's down minus 1.5%. Now it does look like on the chart it could be a 1 bar pullback, so wait for it for tomorrow. Those of you who are looking into the Singapore market in here, Jardine Madison, all right, will be that stock to look at. All right, now compared to the last round where they had the what we said about here, it actually moved right from 52 to $60 in here. A nice move, and then the red Pentagon came out, and then the market started to drop down. Usually this is the kind of condition that we see. Okay, now let's move on to our next story is the new feature. That's right, the new feature in here, which we did debut on Monday, would be the watch list. So this is one of the watches, so you can set up your Pentagon list in right in front of me, top here. We did remember we did put in front can. That's right. If you look at front can is the stocks that we actually put on, and let's take a look at it. All right, so you can see that was the trade idea. Let's switching to a wider chart. So a lot of the trade idea we set up for episode 145, 20th of December. So since then, the market has sort of moved up 1%. so far for today. So that's pretty good. So any stocks that we talk about, we definitely put it in here. Then you can able to see it. Kosan is up. KGB is up 3%. That's a very nice one in here, right? 169. And Public Bank is up 0.5%. So by having this list, this will definitely put you in a better position. So make sure you check out the watch list. Okay, put up in your watch list in here. And also for today, when we do our trade idea, for episode 146, we will give you how to use the watch list too. So hopefully this will definitely put you in a very good spot. Okay, and thank you for sharing this video in your timeline. If you have any stocks or any concern, do pencil into the comment and be happy to assist you in any way that I can. All right, now let's go over to our next segment in here. Now let's look at the lesson learned from our past trade idea. First one was HPNP on the 8th of December. So let's take a look at the trading plan for that one. Now this was HPNP, okay? It did had R1 and R2. R1 was 72 cents, R1 was 76 cents in here. Weekly support is 60 cents. Let's take a look at HPNP. Where did this stock go to? Okay. So HPNP, NT. So the market did take off and hit. It did hit 72 cents, yes, hit 72 cents, and then only on this yesterday there was a 7% sell-off. Else it could hold on to this level in here. So there was a quick profit taking in here, but the market did rebound back in here. And sometimes as the market go higher, it's always good to take some profit, because our market, the KLCI, is not in what we call a green pentagon. Okay, it is the KLCI. If you look at it, it's still pretty much in a downtrend, and we have been down almost 8%. So that is why, as I said before, any possibility at the resistance, we'll see a lot of profit taking, and you should learn how to take profit quick too, right? Let's take a look at the next one, AMB, which is a banking stock, which we have here last week. This was AMB when we picked it, 286. And now take note, because of the interest rate hike, the finance sector, and how do we know that? Just go over to the Robie chat here, and you can see hot sector right now. What is showing is the utilities and finance. So most of the finance stock, in this case, why did I do that for? Okay, and you have ABMB. So make sure you get hold of the trading wheel. You can see this is on the 1st of December, right? And that continued to go up. So the trend now, finance is in a nice trend. A lot of them are moving up, right? Even Public Bank. Okay, these are considered as value shares because the finance sector on the anticipation of interest rate hike. Malaysia will hike interest rate. So that's why the stocks is going up. All right, that's how it works. Okay. So let's go on to the episode 146. Okay, 146 for 22nd of December. Okay, 146. So let's build a trading plan for this. Right, you can see the banking stock seems to be doing well, as I said before, due to the anticipation of interest hike in now. So this is the best time to get into the finance sector. All right, so let's bring out the CIMB. Okay, CIMB here. And one of the ways to do this actually is pretty easy. All right, we'll build the trading plan from here. Okay, and we can see that. Okay, let's take a look at the let's look at the weekly basis. Oh, it's been up since 21st of June. Okay, weekly green pentagon since 21st July. Okay, so 21st June, sorry. Daily green pentagon on. Okay, that will be 22nd of. Okay, so that's a good one in here. So what else can we put? The weekly R could be possible of a entry. Okay, at what price is that? And we can look at the, how do we check that? Okay, one way to do that, you go over to the KLSE, to the ST2 daily stock, and you can see CIMB here 1023 532. Okay, 532. So what is the price right now? Is 534. Okay, so that's good, right? So that's a nice breaking up of the weekly, and that hopefully we see a trend progress until next year. Okay, now so far we have seen the last indicator, Robie turned green Pentagon, so it is a continuation of a stage 2 shares. Okay, we have a couple of pullback, but take note of the old recent high. So for the old recent high, we need to go to 1023, and we go over to our trading plan. Okay, weekly resistance of R1, weekly resistance is 538. Okay, 538, which we have sort of broken through, right? Did we? Yeah, 538, 532. Okay, 538. Yeah, okay. So weekly resistance is 538. So 0.94. So we will put in the important price level. So R1 is 541 and R2 is 578, which is a really 8% profit. That's about it. It's pretty a small profit in here. Last closing price is 533, which is yesterday closing price, 533 in here, and you have the weekly resistance 532. Yeah, okay, so that's what really we are looking at. Why can the market move higher? And this is because of the finance sector, okay, moving in tandem with interest rate hike in US, okay, 2022. Now if you switch over to the US, looking at XLF, okay, and you will notice it is moving along the finance sector too. Okay, so let's look at the low support. Okay, the low support in here would be exit strategy. So exit strategy here will be S1, right? Or we can take the weekly support at 511. Okay, low 511, because the market is moving higher and we don't want to give back. So 511 will be the support, and another one will be, okay, 511. You can see this one here, weekly support 511, or we will use the weekly support 495. Okay, high resistance, that's we're looking at the resistance R1 541, which is almost there, so we take 578, okay, which is here, right? R2 at 578. Okay, trending period here, we look at it, we started here, we drag on to here, which is about 20 days, so this will be for 1 month. Okay, so 1 month, hopefully we'll make some profits from in here, and that's will keep us alive in here. Okay, so that concludes the trading plan for the CIMB trade idea in here. Now going forward, we are looking at the comparison of our portfolio, which we have started from January, the last 12 months. For those of you who have been joining us for the last 12 months, we have seen this journey, how we have taken, to do our trading. The last trade that we have was Inari in here, and overall we have beaten the KLCI by 14%. Okay, we are at the plus 6%, and a lot of time when the market is bad, we stay out. When we hit our ATR stop loss, we will exit. Now the same question I will ask some of our audience here: have you cut loss in some of your trades that did not work, or have you taken profit? Right, you need to have a plan, and more importantly, that plan will keep you and produce a very good report year in. So we'll be doing also in year 2022 a very similar result, so you can see, keep track of this, how you can perform it. Now from our Pentagon portfolio, there's a QR code, you can track it there. We are about 6.4% return, and the blue line that you see on the left hand side here, all right, that's the one continue to beat the KLCI, which that's about 8% down so far, right? And unfortunately, KLCI going forward for 2022 will be pretty much in the same situation in here, all right? Now, also tonight, as I said before, I'll be talking about the US and the KLSE, what will happen and what has happened in year 2021, and what are the sectors to watch out for in this very quick 1 hour talk tonight in here. And if you have any question in here, do let us know. And this is the area going to be. Okay. All right, and also on this coming to 12th of 13, those of you who have not been very successful in our Malaysian market, as I said before, because of the thing, why not look into the US stock sector ETF, exchange traded fund. So on the 12th and 13th, right, we will show you a step-by-step guide to profit in ETF through our live Zoom session over 2 days. We start at 8 p.m. So this is a way you can learn how to build wealth, grow your retirement account, which we are doing right now for myself too. And the results are not too bad, are very promising in here, using our trade VSA indicator and so forth, right? So we also will have our members training in here. So make sure you join me on the 12th and 13th. So registration is through the number in there, 0102669761 in here, registered, and we have an early bird fee before the 31st of December to get this very good US stock ETF, which will help back, in my opinion, to recover some of the losses that you made in 2021. All right. Okay, now we have come to the stock review site for Google. For those of you who have given us your review on the Google Play Store and iPhone, we thank you for you. And for those of you who have some stock you want to look at, I'll be happy on that. All right, we have the first one from Sue, which is a housewife on ATA INS. Very simple. If you look at ATA INS, right? Okay, ATA and INS, you should have gotten out on this bar here at $2.12. All right. So right now at this price, my opinion is as it moves higher, exit. Okay, exit. This is already a loss trade. All right, very similar to Silver Dynamic. Okay. Now unless ATA INS can demonstrate they'll get back Dyson, this trade is as cold as a dead fish. All right, so that's my point. It's always good, I think, all of us, what we have learned over time, why we were able to have a 6% return. Not great, right? Of course, in year 2020, we have 106% return compared to some of you who have this. We prevented because we have a plan. Now, by using the right indicator here, as you can see, the ATR stop, once it's broken, you exited at 212 or maybe even $2. You would have prevented this all the way down. I think that's also important. Many of the public who are watching this can learn something from here. All right, we have, okay, we also have Kirby. Kirby, please let me know whether you are from a public or from our masterclass members. So I just want to know that. We also have Richie, Isaac. Okay, please let me know. MGRC. Okay, MGRC, this one turned green Pentagon. Usually I would say this kind of stocks, it's what we call smart money stocks. It's better to stick to an intraday trade. If you just get a 10% whatever, you trouble. Right now it's a green Pentagon, no doubt about it, right? It's up 7% in here. You got an old resistance at 135, but it's better for you to switch on to the hourly chart. You need to trade the hourly chart for this kind of trade. Don't use the daily chart because this is a smart money kind of trade. In here, if you got in a green Pentagon, that will be around the 73 cents. So as soon as you have a red Pentagon, you want to get out. So make sure you switch to an hourly chart. Yep. Okay, Isaac. Okay, switch to hourly chart and trade along this line because this one right now is going up in the nice trade in here. Wait for a 1 bar pullback, which we teach you. Trade the hourly chart, right? Don't use the daily chart. By the time you get to the daily chart, it will be too late. All right, any more stocks? Let us know. All right, So for some of our members who do have attended our course and so forth, that would give them an edge using the right tools over this one right here. So with that, I will end my session for today. So join me tonight at 9:30, and don't forget to subscribe to our YouTube channel in here for all matters relating to educational trading ideas, educational indicators, and also how to read a market better to become a better trader and investor. That's always been our goal here with using SMARTRobie or using our VSA 360. So thank you very much, and don't forget to review us on our Google Play Store, and thank you for your support. I'll see you tonight at 9:30. Bye bye.